Welcome. This is lesson video number 4, talking about momentum and how to practically apply this in a useful way in your trading. So if you guys haven't already watched the first 3 lesson videos, definitely make sure to go and watch those ones. This is probably going to be the shortest lesson, and so shouldn't be longer than 5 to 10 minutes. Before getting into all of the details of how I will practically apply momentum when I'm trading, giving a quick shout out to my affiliate, Bing X Exchange. Cool thing about these guys is you can trade crypto, stocks, forex, indices, and commodities all on one exchange with no KYC required. So check those guys out if you're interested in an exchange. But let's now get into this lesson on momentum. Now, we're not going to talk about velocity and mass and calculating momentum. And we're talking about how to practically apply it in the markets for our trading, and what I've noticed about it over the course of almost 10 years of trading experience. So let's get into it with just a basic example of what I've noticed, and then we can look at our RSI and the price and see what type of patterns and repeating things that we can notice with the momentum. So just drawing it on here, what do I notice? Well, typically when we have a move, things don't finish with the largest move. So we may get a little push up, we get a big move, and then normally it doesn't just top right away like that. Normally what we'll see is a slowdown first. So we may get a sort of trickling effect, something like this, where things kind of chop their way and slowly start to decelerate and then take a downturn after doing so. So how do we actually practically apply this? Well, we want to assume that we're going to see price continue in the direction of momentum. So if we get a strong momentum move, which we can see on our indicator like the RSI, we'll take a look at examples in just a sec, then we want to be with that trend. We want to expect that the momentum will be continuing until we actually see this sort of deceleration, and we can see it with a bearish divergence or a bullish divergence. So let's take a look and see why we don't expect that this first move is going to be the exact bottom or top. We look for at least some follow-up moves after that. So let's just go in here and look at strong momentum moves based on the RSI. So meaning we have a push where RSI goes below 30 or over 70. And how to apply this properly is we only want to look to be a buyer and expect strong continuations with momentum in an uptrend, and in a downtrend we want to expect that momentum will continue after we go below 30. We will see more follow-up moves to the downside with our momentum. So just to kind of illustrate things more clearly, we'll just look at some examples. So where do we go into quote unquote oversold territory on our RSI? Well, here we see 30 right in this area, right on this candle. Now, what we want to anticipate when we see this, if this was a downtrend, just showing an example. Right now, of course, things have been in an uptrend, but just assuming this was a downtrend and we were looking to be short, well, we would expect that this is not going to be the bottom. We would expect that after a consolidation or pullback that we see at least another follow-through move, similar to what I had drawn down there, where we get our major move, then we may have a pullback, but at least a follow-up move, but a smaller follow-up move before getting into a larger pullback or reversal. So that's what we get here. We do get a follow-through move there, and then we get a bit of a pullback, but we continue down again. So what do we notice? We go into oversold here on this candle. We continue with another big push down. We get a small pullback, and then we continue even more. So going with our momentum, we are not expecting that when we go here into the below 30 territory on RSI, that's going to be a bottom. We actually want to expect the opposite. We want to expect that momentum is strong to the downside, expecting continuation to the downside more times than not, that's what we see. So this is a range where actually this doesn't work nearly as well, but it still seems to work quite well, even in a range. Let's take a look at a move to the upside. So the idea here being we're not expecting a top just because we spiked up a bit and went into overbought over 70. So here we go over 70 right on this candle here. What do we get? We get a red candle, a little pullback, and then our follow through move to the upside. We get another pullback. Next time we go with some momentum to the upside, strong momentum over 70 right here. And that's on this candle. Well, what do we get? We get consolidation, follow through, more pullback, consolidation, and follow through before actually getting into somewhat of a deeper pullback. So normally it's a bad idea to think that a reversal is coming just because we've gotten into overbought. Normally things are just getting heated up. Our momentum is strong in that direction. So we want to expect the momentum will be continuing until we start seeing it slow down and forming a bearish or bullish divergence, as talked about in my last video on divergence. So this relates to the divergence with our momentum. And we can look at this even more clearly in a very strong trending move. So if we take a look here, we go overbought 70 RSI right here on this candle. Things continue much higher and even continue higher after putting in bearish divergence. So again, if you watch the last video, we don't want to expect a reversal. We want to expect continuation of the move. So when we have a strong momentum move, expecting we will see continuations of at least another push until we start seeing things really slow down. So as I drew earlier, we get our big push, get strong momentum. This is where we go into that overbought territory, quote unquote, 70 plus RSI. But then we actually continue higher and we keep going higher until things kind of start slowing down. We see that deceleration, which we'll see with bearish divergence on RSI or other indicators. So momentum, when we get that momentum into the market, normally we're going to see things at least continue a bit higher, and we want to use this with the trend direction in mind. Okay, so don't look to be shorting in an uptrend no matter what. Even though, sure, we may have a momentum move to the downside in the context of an uptrend, and it might continue lower with another move down, but it's not a good idea to do that. You're going to be much more successful looking for strong momentum in an uptrend, looking for strong momentum to the upside in an uptrend, expecting we get those continuation moves when we have a good strong momentum move. So let's take a look, just some more examples. We have, of course, many examples recently due to strong uptrends that we've been seeing with Bitcoin. So we go into 70 plus on this candle here, and we just keep on going higher. So don't expect that momentum is going to stop suddenly just because we get a strong momentum move where we see RSI go 70 plus. Then we can look at some strong downside moves. So this pullback in the context of an uptrend, we get into kind of that strong momentum territory right here. So on this candle right here, and that is absolutely not the bottom, but that's where we see our strong momentum coming in. We go sub 30 on RSI. So the idea is not to expect that this is then going to go up. The idea is to expect that this is going to continue down for at least another move to the downside. After some sort of pullback consolidation, we should see at least another move in that direction. So as I was saying, we don't want to expect that our bottom is going to be like this. We want to expect that the bottom is going to look more something like this, where it kind of trickles down, starts slowing down, see that deceleration before then going to the upside. So that's kind of the idea there. And we can look at it at many different points, but that kind of covers really the main idea of momentum and trading with the momentum, and also just expecting that the momentum will be continuing. So if you're already in a position, let's say that you're a buyer on a pullback, and then we start seeing momentum come to the upside, don't get scared and exit the position too early as soon as we get into this territory here. At least wait a little bit until we start seeing things slow down. So this continues higher, strong momentum still. We peak out right here on RSI, and then our next higher high after that, we can start seeing that the momentum starts coming to the downside, so we have that deceleration happening. So that would be a better area to think about exiting, not right at the beginning of right when the momentum is getting started. So that's kind of the idea here. So while if you're already in a position, can use this idea to hold on a bit longer, capturing the best, largest moves until things are actually starting to slow down. And also just making sure that you are not trading against the momentum. So you want to be with the momentum and obviously with the main overall trend. And then when you're entering into a position with the trend, we want to wait until the momentum kind of slows down, which means we are seeing a bullish or bearish divergence depending on the trend direction. Uptrend, we want to look for that bullish divergence, as I've said in the other videos. And then for a downtrend, looking for a bearish divergence to get in as momentum slows down to the upside or slows down as it's going to the downside on a pullback, then expecting that trend continuation move to the upside. So that's kind of the thing with momentum. Really the main takeaway is to expect continuation moves when we have strong momentum. And so not expecting that it's just going to be like this. We want to expect that, okay, strong momentum move, plus 70 RSI here. We're going to probably see at least another higher high there. So looking for that higher low and higher high out of there, not just expecting we go like this with a sudden reversal, no slowdown, just strong momentum move, then just suddenly comes off and V-shape bottom or V-shaped top, I mean. So that's kind of the idea. Pretty simple, but that's just what I've noticed and what you can go back and look. What's going to give you the best opportunities is trading with the momentum, with the overall trend direction. And that's pretty much it for this video. So that will cover things with momentum. Kind of ties in with the divergence as well, of course, because we're looking for the momentum to be slowing down, or price action is decelerating with the divergences. So it all ties in together. With the divergence video, make sure you watch that one first before this one. Thank you. Bye-bye.